Okay, James, we are ready when you are.
Okay, so I'll just start by sharing the screen and then speaking to it. I'm not share screen while the other participant. Okay, Doc, can you please go up so that I'll share my screen?
Yes, I've done that.
Okay, so I'll share mine then. Yes. Okay, is it live?
Yep.
Yeah.
Okay, so can we start?
Please shoot.
Okay, all right. So hello everyone. Thank you very much for joining today's webinar. My name is James Alotokan and I work for Halliburton in Ghana, and I am also the YP chairperson. YP simply means the Young Professionals chairperson for the SP Ghana section. So we all know the reason why we are gathered here, but I'll still reintroduce it. I'll briefly talk about why SP is here, and then we can give the floor to Dr. Tue Champon, and then we'll be going. So SP is the largest individual member organization serving managers, engineers, scientists, and other professionals in the upstream segment of the oil and gas sector. It doesn't mean we don't accept members from other sectors of the industry, such as the midstream or the downstream. If you are within those sites, those sectors as well, we can give you membership. And then we also don't accept. We also not only accept engineers and scientists, but then we also accept economists. That's how come Dr. Tue Champon is a member, and then all other professions related remotely or unremotely to the oil and gas sector, you can become members. So SP promotes the exchange of technical knowledge within mainly the upstream oil and gas sector and then other sectors as well. It was established in Ghana in the year 2010 in September. So it simply means September 2020, we are 10 years of fully operating in Ghana. We have been at the forefront of exchanging technical knowledge, promoting the energy industry, and then giving back to society. We have two types of memberships, the professionals and then the student membership. I'll first of all start by acknowledging Henry and Celestina for pulling Dr. Tue for agreeing to speak to us on this topic. Shina also answer our secretary, Atu Edu, our past chair, Atu Deborah, our treasurer, Dr. Revison upon our programs chairperson, Cyril Abevo, our communications chair, and then Sheldon Amba, not forgetting Fifi, our student liaison officers, for helping put together this program. And then I would also like to thank Dr. Tue very much for accepting to speak to us on this program. The reason we are here, last year, May 2019, Ghana's upstream oil and gas sector saw a very large high surge. We had 4 rigs operating in Ghana. All the three, the Max Ventura, the Max Voyager, and the Max Viking, all operating within Ghanaian waters, plus the Stena Forth. But this year, the story is totally different. Even the last one, the Ventura, will be leaving in June. COVID-19 is really affecting the Ghanaian oil and gas industry, not only in Ghana, but then the outside world as well, coupled together with the price war between Riyadh and then Moscow. It has escalated between so many nations, even though it was started by these two countries, and then the COVID also came into being. So therefore, we all know the effects, especially in Ghana. If you've been watching the Ghanaian oil and gas space, or even the larger Ghanaian space, you see that the government even proposed using, or they've even gone to parliament to change for them to use a stabilization fund and then the heritage fund, oil and gas industry right there. It is affecting Ghana's oil and gas industry, whereby large or small companies are even laying people off. What does the outlook look for us? At this time, really anything different? I don't think so. So therefore, we brought in an expert in his own right, Dr. Tue Champon, to just give us this lecture. So on this note, I'll hand over to Dr. Tue Champon to take us through this lecture. So Dr. Tio, over to you.
Okay, thank you very much. Just a second so I can share my screen. Can you all see my screen?
Yes.
Okay. So thank you very much once again, James, and thank you to the SPE Ghana leadership for facilitating and organizing this afternoon's technical meeting or webinar. Today's webinar, and I welcome all of you, but today is just to look at some of the developments in Ghana's, oil and gas industry. In the wake of the twin, or you could even argue the triple crisis, the health crisis, the commodities price slump, and then the financial crisis as well that is sort of looming in the horizon. And so for today's session, I'm just hoping to just give a bit of a color, as to what is happening more at the global level, what that means in the context of Ghana. I'll zoom in to look at the oil and gas sector specifically, and then I'll hope to conclude with some sort of suggestions on what could be done to sustain activity levels in the sector going forward. It's important to note that the world is facing a crisis like no other. Um, in my lifetime, in fact, for as long as I've been an adult, I've actually seen three crises. So we saw 2007, 08, 09, the financial crisis. And at that point, myself, I just completed university. And coincidentally, this was the same time that Ghana had actually discovered crude oil in commercial quantities. And there was the whole euphoria accompanying that, as well. And then we've seen the, 2014-16 oil price crash. And only 3-4 years later, we're now talking about, COVID and its impact, on our livelihoods and actually fundamentally changing the way economies are run and done, going forward. So in a space of 13 years, we've seen these three major, crises. And you kind of wonder, is this the new normal that we are going to be used to going forward? This particular crisis is a crisis like no other, in the sense that it's both demand driven, and then there's also a supply side aspect as well. And the world currently, if you look at all the major forecasts, is heading towards another recession. If you look at the most recent estimate coming from the IMF, in their April outlook, we're actually expecting global GDP growth to drop by 3% in real terms for 2020 going into 2021. In contrast, the 2009 financial crisis actually led only to like a 0.1% drop in GDP growth. So you can actually see that this is quite, we live in quite extraordinary times. And therefore many countries, are facing this triple, whammy of a health crisis, a financial crisis, and a collapse in commodity prices. And as you can see on the chart on your screen, you can see, pretty much the economic outlook dropping. There's still a question on whether or not we're going to be seeing a V-shaped or a U-shaped or even an extended U-shaped recovery. What that really means is that are we just, going to come down and then, things pick up, pretty much straight away once the restrictions are lifted? Or are we looking at, drop in an extended duration? I think I can hear feedback. Could you please mute the, yeah, I've muted a person, so just make sure we don't get the feedback. So, you could see the drop in growth. Equity markets have taken quite a big hit. And if you look at, commodities market as well, of all the different commodities, crude oil, particularly, Brent WTI, on your chart on the left-hand side with the blue bar at the top, is the one that has been heavily impacted, to date, by this crisis. And the forecast, for the next sort of 6 months to 1 year is, it doesn't look too encouraging or promising. What has been the response so far to the crisis by different governments? So the governments have adopted a mixture of both monetary and fiscal policy responses to the crisis, and you can see, whether we're talking about advanced economies or emerging markets on the chart on the left hand side, all of them have implemented a combination of measures. So we're talking about, extending credit to some vulnerable households, or those who will be most impacted, a combination of tax and social policies, even some regulatory policies, have all been thrown in an attempt to fight or mitigate the effect of this crisis going forward. Now coming home to Ghana, we're not any different. So, with the two newspaper clippings you can see on the screen again, the government recently announced a 1 billion, economic stimulus package, and, followed or corollary to that, the Bank of Ghana as well has also, announced a number of monetary policy, responses in an attempt to mitigate the impact of the crisis. A key indicator here is the fact that they actually reduced, the base rate by 150 basis point from 16 to 14.5 percent. And consensus is even out whether that could go down slightly, further. So that is sort of the context that we are looking at things now, where we are facing this triple crisis, and it has had a resultant impact on the oil and gas sector. And the key questions that have been, coming for the last 2 or 3 weeks have been things around, what is likely to be the impact of this on upstream projects development investment in Ghana, on the macroeconomic or revenue side. What does that mean for our oil revenues? And the other question is, okay, if you look at Ghana as a specific case, how would the sector, be able to respond to the crisis, and what actions and policies can government, take post-crisis to sustain investment in the sector, create jobs, revenues, and then, support the broader economy as a whole. So I just want to now delve into some of the more specific and some of the more nuances in here, to now look at the Ghana context, and then we'll zoom in into the oil and gas context. So as I just mentioned, a lot of economists are taking a battering. They're actually taking quite a big hit. If you look at the chart on your left-hand side, this was back in October, September, when the IMF was actually forecasting several of the African economies, including Ghana, to be doing 6% real GDP growth, for 2020 going forward. And in their most recent estimate in April, you can visually see the change, in those estimates. So basically, for example, for Ghana, instead of the forecast of about 6%, or more growth, we are now looking, between 1 to 2% growth for this year on the downside. And this has quite a big implication for jobs, for also the oil and gas sector, and we'll look at that in the next few slides. And corollary to this, as you can see, we are already having quite a big or witnessing a big impact of the slowdown in economic activity. So on your right hand side, which just measures the purchasing managers index, for Ghana, in the last 6 years since the index was actually constructed, for March and I think for April, we've seen the single biggest drop in the PMI over the last 6 years. What the PMI measures, if the mark is about 50, then managers or are expectant of an upturn in economic activity, and likewise if it's below 50, we're expecting a downturn. And so what the economic forecasts are looking, together with some of the real sector indicators like the PMI, is that we are going to see a sharp drop down in or slowdown in economic activity for Ghana, like most other economies, in 2020 and in 2021 going forward. But it also does present, you could argue, opportunities as well. So for every, for everything that happens, it's a matter of whether you look at it, with a morose outlook, or you can actually see the opportunities out of that. So what I've shown here on this chart really is that where or how we sit in relation to the taxes that we're collecting in Ghana. So currently, we're only collecting 12% of our GDP as taxes, which is quite relatively low for even compared to some of our peers like South Africa, Botswana, Mauritius, and even some of the francophone countries. However, there's a potential to actually go up to between 18 and 20%, of GDP. If we can close the 8% gap, then we actually are talking of an opportunity of about 25 billion Ghana cedis, or roughly 5.2 billion dollars. The estimate from the likes of the IMF, World Bank, and some of the other multilateral agencies is that the current revenue mobilization initiatives that are ongoing or being undertaken by the government is only going to be yielding about 1.5% of GDP, extra, tax in terms of GDP. So we'll still have, roughly 6.5, 6%, gap to close if we want to, meet a lot of the spending and domestic obligations that we have in the country. And it is in this context that oil and gas actually plays quite a significant role, and particularly, efforts that we would undertake post-crisis to create, more linkages and to create more opportunities in the sector. So now let me zoom in into the oil and gas sector, and let's look at some of the more sort of nuances and specifics that are happening in there, and hopefully I just finish it off with some recommendations on the way forward. Several of you would have seen charts like this in the last couple of weeks. The oil price chart on your left hand side, and for the first time in history, we saw oil prices, or WTI to be specific, dipping into negative territory. Basically, the buyers were paying people to more or less, store like the oil. But the interesting thing is the chart on your right hand side, where as a result of COVID, as I mentioned earlier, we expecting quite a big drop in global oil demand, and that has significant implications for producing nations, like Ghana. I've already mentioned that the jury is still out on whether or not we're expecting this sort of V-shaped or a U-shaped, or as I've heard, probably more of an extended U-shaped recovery going forward. With the decline in prices, and with COVID, what we are actually seeing is a number of responses by different producer nations to attempt to mitigate the impact of that. And what I've done is just break it down at three levels. One, at the national level, looking at the impact and the government policy response, looking at the project level impact, and then of course the supply chain and local content impact. And Ghana is not an exception in this case. So we've already seen production cuts being announced by the likes of OPEC, and even Norway, which is a non-OPEC country, has announced, cuts of around 250,000, barrels a day. In Canada, the Canadian government has actually offered a fiscal stimulus to producers. In Norway as well, likewise, they've announced, a number of fiscal stimulus to some of the oil producers in an attempt to keep the taps still going. But the most or the biggest impact to date has been at the project level, where we've seen production cuts, we've seen projects being delayed, major drilling programs being suspended, FIDs, final investment decisions, all being, postponed. And two very good examples here, is the huge LNG project in the Rovuma Basin in Mozambique that's been postponed. And then even back home in Ghana, Ake announced a postponement of their Pecan discovery a couple of weeks ago. Likewise, it has an impact on the supply chain. And within the supply chain, we've seen the disruptions caused by COVID, impacting equipment supply. So most of these equipment were being fabricated in yards in Asia, including in China, and for projects that are like the Tortue project in Mauritania and Senegal, that actually has been delayed by about a year. And we've seen quite also a lot of unemployment layoffs and in the industry. But what this reminds me really is us going back to 2007, 2008, or in most recent times in 2014. And I remember very well in 2014 when I was working for a small EMP company here in Aberdeen. Before the price crash, there was over 51 of us in the office. So this is just around mid 2014. By the time I left the company in 2016, that 51 had actually dropped to only 8 people, working in this particular office of mine. And unfortunately, we might be seeing, things like that, as well. But the upside to that is that a lot of the skills that people actually acquire in this industry are transferable. So I've seen, mates of mine, people actually now working in the marine sector, doing like, installing wind turbines, working on some of the renewable energy projects, particularly in Europe and in other jurisdictions as well. Um, in the context of Ghana, it's a bit more challenging, and I'll explain in the sense that oil and gas has become a critical component of like the country's economy as a whole. So if you look at like the three biggest export earners for the country, it's historically was gold and cocoa, and we even used to have tourism at one point being the second highest FX or foreign exchange earner. Now it's actually cocoa, gold, and we've got black gold and oil. And since 2010, the country has received just a little under $6 billion in oil revenue, of which about 70% in total has been used to support the budget and then also to support the operations of GMPC, the national oil company. And what you can see on the chart on your left-hand side really is that as the oil price has gone down in the red bar, likewise the amount of revenues that we are able to collect is also gone down. Two examples to highlight that. So in 2014, before the price drop, the then Minister of Finance actually went to Parliament with a budget that had an oil price of $99.38 per barrel in November. And by July or June of that year, the price had actually gone down to under $40 a barrel. And at the end, so basically we needed a supplementary budget. But at the end of the year, the estimated $1 billion of revenue that the government was hoping to get, we only got a little under $247 million of revenue. So it just shows you, how the revenue patterns have been more or less tied to the oil price. Luckily, in 2017, 2018, 19, we had two new fields coming on stream, Sankofa and 10. But what you can see on the chart again is even with the revenues that we got in 2018 and 2019, they are as comparable to what we had in 2014 when oil prices were around $99 a barrel. So in 2014, it was just one field, but in 18, 19, and in the foreseeable future, it's coming from a combination of three fields. So we've had to pump more volumes just to be able to sustain or get an equivalent amount of revenues as we were getting in 2013, 14. And the government anticipates that we're going to be getting a little over 400,000 barrels a day of oil output in the next 4 years. And there's a bit of a big question mark around that, and I'll show you in the next in the next slide. So the revenues are critical, and they are key to sustaining a lot of like the economic programs that the government, has planned to undertake. A good example here is the famous free SHS policy. So free SHS at the moment is being funded in part by ABFA, the annual budget funding amount. And so if you have oil revenues behaving the way they are and prices where they are now, then there are big question marks around, some of the sustainability of some of these, programs. So let's delve in a bit more to now just look at the production outlook and sort of the revenue outlook as well. So I think that in the short term, what would really happen is, given that we don't have any new fields that are likely to come on stream in the next 1 to 2 years, the one that the country was banking its hopes on was the Pecan or the Aka discovery, and they sort of have put their FID on hold. So if you just on the basis of what we're currently producing, which is just 10 Sankofa and then and Jubilee, then what you're likely to see is the production or our production peaking around 2021. And from 2021 onwards, if we don't make any new discoveries or start the development of new fields, then gradually, as you see on the chart on your left hand side, you are gradually seeing that decline in output for the country as a whole. So that's sort of the kind of short to medium term outlook, if you were to ask me, that the key take home point here being that our production is likely to actually peak by about 2021, and we need to replace those lost reserves. But the environment now is quite challenging to do that. And then what you have on the chart on your right hand side is just now looking at, I tried to forecast what the revenues are likely to be for 2020 and 2021. I mean, oil revenues. So if you use a conservative oil price of $34 a barrel, and this I got it from the US EIA for 2020, and another price of roughly, if you assume that there's a recovery in economic activity and there's an uptick in demand, and we see prices picking up to sort of the mid to late $40 a barrel range, then what you are likely, or we are likely to get as a country really in 2020 is a little under $500 million of oil revenues. In the last budget that the government presented, The 2020 budget had $1.4 billion of revenue that we were expecting to get coming into the country. And just by running the numbers through the fiscal model and with this oil scenario, we're likely, I think, to get about $500 million. And if we use $47 a barrel, that would pick up to around $693 million. But what you can see is that it is still nowhere near the highs of 2018-19, or even if you went back into time, what we got in 2014 when the price was $99 a barrel. So this is my sort of medium to short term production outlook, where we're picking in 2020, 2021. And the revenues are going to be substantially lower than what the budget, was forecasting to have we would have got. But that's not all lost. I think that there's still opportunities, to improve the sector overall. And generally, in terms of the investment outlook, the number of factors that drive investment into the oil and gas sector, broadly, they are categorized as, below and, above ground factors, which looks at your fiscal or your tax terms, the contract terms, you look at the cost environment, things like the country political risk, you bring all of that together, and that more or less would determine the success criteria in terms of our ability to attract investments into the sector. So when you apply this to the pre-COVID, situation in Ghana's upstream oil and gas industry, you can see that pre-COVID, there was quite, a lot of interest in the sector in general. So we had ExxonMobil signing a deal for one of the deep water blocks in the, Cape Tunnel Basin. And then, of course, Ake also came in to buy Hess' stake as well, more or less within that same period. And this was off the back that between 2016 to about 2018, early 2019, we hadn't even drilled any new exploration well or wildcat wells in that time. So this was met with a lot of euphoria, with a lot of expectation that will be able to, sustain activity in the sector, and of course, increase the reserves and the production overall in order to mitigate the production downturn coming in from the 3 fields that we currently have. However, the picture is slightly different now. So what you can see on this slide is just different newspaper clippings that I just put out there, capturing in essence what has been happening in the sector immediately before COVID and post-COVID. So we had a licensing round just a few months ago. The outlook, wasn't, in my argument, not that great, and there are a number of reasons for that. One of which has to do with data, and I explain or provide some solutions to that in the way forward. But the other things that have happened in the sector has been, ACARE postponing this major development that they wanted to undertake in the sector, and this was even after the state had gone extraordinary lengths to even, change some of the terms in the contract to make the investment more favorable for them. In between, we've had a couple of tax issues as well, between Anadarko selling its stake to Occidental, and then Occidental subsequently also selling its stake to Total, and that is continuing to kind of hamper some of the investment in the sector. I mean, I completely understand where the government is coming from in terms of the the capital gains tax and some of the other issues, in the sector. But in this sort of environment, one wonders whether, that can be adjudicated upon much faster, so we can see, an uptick in activity. We had a big discovery that was announced by Springfield latter part of last year. But in an environment like this where prices are low, and you have an independent EMP company, a smaller one like Springfield, it means then that they actually have to look at potentially some farmings, into some of their concession, most likely by a major IOC, to help them, bring their production on stream. What is also quite interesting is that Ghana is not an island. So we are competing for international petrodollars across the board. Whether you look at it globally or even regionally, and as you can see, on this slide, even in the West African sub-region, you can see the number of licensing rounds that a lot of the countries have planned. Nigeria, Cote d'Ivoire, Gabon, Angola, all these licensing rounds are open or ongoing. There's a big question mark around that as to whether they'll be able to attract some of the majors, or even other made independent and some private equity backed companies to take on some of these blocks. So it means that for Ghana, we've got to be a bit more creative in terms of our approach to attracting more international petrodollars into the sector. I'll show you some means of how that can be done in the next few slides. But the point here is that we are competing at a global level, at a regional level, and even at a continental level for the same, petrodollars. And for a lot of the investors, they don't look at Ghana in isolation. As I showed you, they look at it with the both above and below ground factors. And one of the reasons some of the IOC cited for the low patronage in the licensing round as actually the size of the blocks. Some reasons like that have been cited, that they were relatively sort of too small, and there were data quality issues, as well. So let's look at a couple of points in terms of the way forward for the sector, and what could be done to sustain investments in the sector in the medium to long term. So here I outline 5 strategies for or to optimize petroleum resource management in Ghana in a post-COVID world. The first one being the exploration strategy. So here I'm talking about us pursuing or identifying like those data gaps that we've got, things to do with data availability, data access for all of the key basins, particularly in the Tano Basin, where a lot of our prospective prospects lie. And then of course we've got a bit of the central and the eastern basins, but they are not as uh, they are not as super prospective as you have with some of the basins further to the west. And then the second strategy basically is around regulatory and investment environment. Here we're talking about things to do with the regulatory regime, issues around institutional mandate and alignment, the licensing, and then the fiscal regime. And I'll show you very specific examples of things that can be done in a moment. The fourth strategy is around, or the third rather, is around asset stewardship and infrastructure. Here to do with improving overall recovery rates, production efficiencies, late life of field, and potential decommissioning as well, which is looming in the next few years if we don't increase or the production outlook for the country. The two other bits are to do with the supply chain with local content, and of course, capacity development strategy. So let me take this one by one and then just give you a little bit of a snapshot on some of the more specifics in terms of recommendation, and then I'll stop there and we can take some questions as well. So in terms of exploration, I think, yes, we've made some attempts to revamp stored oil and gas exploration activity, but a lot more could actually be done. And um, I take note of what is happening in the sub-region. So for example, I think that for some of the licenses that, have been given out, a number of them are actually due to expire in 2020, 2021. Some of the companies haven't actually done anything since they got the license. But I think for those ones that have shown or indicated a willingness to actually, meet or undertake their exploration programs, and activity, perhaps we could actually think about giving them a 1 or 2 year extension, to these programs. And also more so that now rig rates have actually fallen, and a lot of the cost inflation factors are and would likely come down. So it's relatively going to be much cheaper now to actually execute or undertake some of those exploration programs. Equatorial Guinea is actually already gone this way. So 2 weeks ago, they announced an extension of the licenses for companies that are doing work in the oil and gas sector. And in addition, they actually waived off fees for all oil service companies in the country for the next, I think, 3 to 6 months. I'm not advocating entirely for a waiver of the fees, but perhaps, could we consider, a part, waiver of some of these fees? And in terms of exploration as well, I think some of the fiscal incentives can actually be better targeted, in terms of attracting a range, of companies. So if you look so far, the current strategy has been to sort of want to get the larger IOCs to come into Ghana and to explore the deep water or ultra deep water prospects that we have. But I think there's a case to actually be made for smaller independent and particularly the private equity backed companies. They tend to be much more nimble. They tend to be more savvy on the cost, and they're able to execute projects, at a fraction of the cost of what the traditional larger IOCs, are able to do. And the example I'll cite here is the transformation that we've seen in the North Sea across the board. So a couple of years ago, everyone was like, the North Sea is dead. There's nothing going to happen. And I remember having a conversation with a colleague, and I said, don't write the North Sea off yet with a question mark. And the reason for that is that we've seen these new private equity backed independent companies moving in there, much sharper, much agile, and much hands-on in terms of like the cost aspects of operations. And that is something that I think we can potentially, in addition to maybe license extensions and part waiver of fees, be able to do to support or sustain investments in the sector going forward. On infrastructure and asset stewardship, here the focus, I would argue, should be on the marginal fields that we have in the country. So according to the Ministry of Energy, there's actually in excess of about 500 million barrels of resources that are stranded. So these are in pockets of reservoirs, and on their own, the economics don't make sense. But there's actually an opportunity here to engage, or for the IOCs, or likewise for I think GMPC and the Petroleum Commission, to sort of engage with the operators in a bid to kind of develop area asset stewardship strategies that allow the development of hubs and therefore the tie-in of these marginal phase to the existing infrastructure. So the infrastructure being the 4 FPSOs that we currently have, in the country, and that can be done through this asset stewardship strategy, and looking at in terms of regional and area development plans. So if you take like the 10 area or the wider Jubilee area or the Sankofa area, what are the satellite discoveries in there that can potentially, of course, subject to the engineering and the technical challenges or complexities, could be tied into these existing FPSOs, all in a bid to increase the production levels, but also to postpone decommission a few years, down the line. And how this can be done is through the provision of some fiscal incentives as well. So I think one of the things that could be done basically is, for third parties that produce fields from these satellite discoveries and want to tie it into, existing FPSOs that may be owned by the same operator or even, another operator, we could potentially consider a reduction in the tax on the tariff income that they earn. So for every barrel of crude that is transported, typically you would have a tax that would be charged associated with that. And I think we can tinker around with those to see if we can encourage or spur investments through a reduction in tax on the tariff income that the companies will pay. Another potential um, uh, of recommendation could be, perhaps an introduction of a small field allowance scheme, as we've seen in the North Sea, but also, in other jurisdictions where, if you're a small operator, you own a small oil and gas field, you're not necessarily um, subjected to the dictate or the strictures of the petroleum agreement or the tax terms. But here, I think what can be really done is to perhaps maybe pilot it and look at some specific stranded assets that are easily or can be easily tied back to some of these existing infrastructure that we have. I don't think that we should allow the 500 million barrels of these stranded resources just to kind of go waste. Now let me talk a bit more about the fiscal terms itself. I think, yes, broadly, post Jubilee, the fiscal terms have improved quite strongly. So from 5% royalty, some of the contracts that were signed in 2013-14 have like 12.5% royalty, etc. But there's an argument there to be made in the sense that at that time the oil price was super high, and a lot of the companies that actually took these blocks took them for speculative basis or on a speculative basis, and therefore it doesn't come as a surprise that several of them, back now in 2020, are yet to even drill a single block on these a single well on these blocks. And I think there's an argument here to be made in perhaps strengthening, or there's some nuance in terms of the fiscal on the fiscal regime. And let me explain that in a moment, and then I'll just pause. So on this chart, this was a study that we did in 2017, looking at the elements of Ghana's fiscal regime, but in this particular case, the additional oil entitlement. And we asked ourselves, why is the revenue agencies and other players in the sector, why are they complaining? That, well, there was a big debate that AOE has been triggered since 2014. Others were saying, well, AOE has not been triggered and it has to be paid, and there's a whole fury and back and forth, with that. But part of the work that we did here was basically, ask ourselves, let's take a step back and, ask fundamental questions. Is the structure of the windfall tax as currently pertains in Ghana's, fiscal regime, one that is fit for purpose in terms of, fiscal neutrality, stability, and all the other indicators one would actually use to benchmark or measure the competitiveness of a country's, fiscal regime. So here are three results from that study that I just want to show you. But the red line just measures what the current status quo, which is just we have 4 levels or tiers for the windfall tax in Ghana generally. In some contracts, it's 3, others is 4. There's even some of the other contracts that are 5. And we plotted the effective tax rate, the AETR, against the post-tax internal rate of return, the IIR, to measure how progressive, that is as the prospectivity of the fields changes. And then benchmark that against 3 other systems. So one, you ask, okay, can we collapse the 4 into 3 tiers? Or can we even introduce, as what pertains to Norway, a special petroleum tax with just a one-off higher marginal rate of tax? So you don't have to worry yourself about, computing one, deducting, and then computing it again, and then, all those cumbersome, complicated processes. You can actually resolve that by just having, a special petroleum tax. And then another scenario was basically look at the, R factor sort of scheme that you have with production sharing contracts as well. I think we considered one that even looked at, deducting the AOE pre-tax and then giving it as, a rebate to the companies for the payment of corporate income tax. Australia has a system, like that in place. But the point I just want to highlight here is that I think there's an opportunity with this downturn to simplify the tax regime that we have in Ghana. It's unnecessarily too complex and cumbersome, especially on the AOE. And I would argue probably, looking at a special petroleum tax one-off, or an R factor kind of type of scheme, or if we want to even keep the AOE tiers, maybe just maintain it to 2 levels. So that's something hopefully we can do in a bit to simplify the process as we head towards our next licensing round. And by the way, I don't think that the 2020 the 2020 licensing round, if we do intend to undertake it, would attract that much of an interest. My last slide, and I'll stop. This is on local content and supply chain capacity development. So at the moment, a lot of the companies or the local companies in the sector are more concentrated in this green band. So we have a lot of companies doing transportation, a bit of logistics, some HSC, some IT and services. However, and they have capacity, in that. But the real value added is more on the knowledge intensive driven segment of the industry. So I'm talking about, well drilling, fabrication and construction, feed, procurement, etc. And I think we have to, 10 years into this oil and gas business in Ghana, the strategies, I suppose, have to be now geared a bit more towards, supporting local industries in the in the red and then the orange or yellow bubbles, that you can see on the slide, because that's where really the captive market is, and that's where I would argue quite a lot of not only job creation potential, but an opportunity to now create those backwards and forwards and the horizontal linkages, to create a much more diversified economy and to allow us then to meet what I showed you earlier, that 20%, tax to GDP gap that we've all been wanting to attain for some time now. So on this note, I think I've spoken a lot, and I will just pause and we can maybe take some questions.
All right. Thank you very much, Doc. So what we'll do is please type your questions in the group chat. Doc will read them and then he will answer them for us, just to minimize the interruptions from our various backgrounds. All right. Doc, I have two questions. One, actually two from YouTube and then two from the group WhatsApp. David Nakote Abuaje is asking, what implications does the aftermath of COVID-19 have for economic planning? How do we also plan adequately and, if possible, revise the Petroleum Revenue Management Act 851, especially looking at your second strategy, the regulatory and then the investment environment strategy?
Okay, I think economically already we're feeling the pinch, as I mentioned. So the trouble is that since Ghana became a lower middle income country in 2010, more or less we've lost access to a lot of the, relatively cheaper loans, the concessional loans that we hitherto used to access, and now we've had to access non-conventional commercial facilities such as Eurobonds. And on top of that, of losing those concessional facilities, you had oil coming in around that same time, which you can argue has actually replaced some of these, loans that we used to get much cheaper before we became lower middle income. But the trouble with macroeconomic management in general, in Ghana and in a lot of the other commodity dependent economies, Ghana to a lesser extent, but like Nigeria, Angola, or Zambia with copper, is that you see that a lot of the macroeconomic policy making is pretty much tied, to one or two commodities. And of course, since I've been an adult, we've been talking about diversification, diversification, diversification. You could go back to the 1980s structural adjustment programs, and trouble is that even when the oil prices, when commodity prices were super high, we had a boom between 2000 and 2010, 11 thereabout. We still weren't able to use those, revenues to more or less drive or turn around our economic prospects. And you can go back to the 80s, to the 70s, or probably even to the 60s, as well. In fact, I came across an article from the 1930s where cocoa farmers in Ghana, this is just after the depression, the Great Depression, and again, commodity prices had slumped. So in 1930, 32, 33, thereabout, cocoa farmers were actually protesting in Ghana over the low price of cocoa. And they had actually moved from the Krapim areas to come to Accra, to protest, and some even burned like their farms. But what it just shows you really is that we haven't been super great on the whole macroeconomic management side of things. I think this crisis offers us another opportunity, to give it a real good shot at the proverbial diversification game. And with oil and gas, it's more of creating those, value-added linkages, the petrochemicals that we've been hearing, and the biggest opportunity also in gas, as well, to drive some of the more non-power aspects of industrial use.
All right, thanks very much, Doc. Another question from YouTube. We're actually streaming on YouTube as well. Tex Kofi is asking, is there a plan or strategy for Ghana to develop distinctive competencies which will enable her to leverage her oil potential? I think this one should look at your fourth strategy, your capacity development strategy. So what do you think Ghana can do to develop distinctive competencies which will enable her leverage her oil potential?
Um, I think some work has been done. I mean, to be fair to the managers in the sector, some work has gone in trying to support local content development in the sector. But I think where we probably need to up our game is really this area of like supplier development programs. So if you've seen what has worked in a lot of the other jurisdictions, in Brazil, especially, and even in Angola, there's quite a big focus, on the SDPs, and not just picking one or two, companies that are doing well to say, well, there's, local content is doing well across the board, but actively and creatively creating our own, indigenous companies that can compete, at a global or even at a regional scale. And over time, it's what the South Koreas of this world have done with their tables. But I think we have to go back to the drawing board on local content 10 years down the line, and then ask fundamental questions on, okay, what has been achieved in which segment or part of the industry, as you can see on this chart, and where can we create the next, chain of value added activity in the sector, all anchored on, on an active SDP program. And I think there's also talk, if you look at LI 2304, the local content law, there's a local content fund that is meant to have been set up. I don't know, and you could correct me, but I don't know if the fund has been fully operationalized, as yet. But that's another avenue, in terms of supporting local content and the development of linkages across the board.
All right. Thanks very much, Doc. We'll now move on to the Zoom group chat for the questions. Dr. Juliet Tumesianoche is asking, in terms of supply chain development and local content in Ghana, what advice will you give to Ghanaian companies who have invested in the upstream sector only to see their investment go up in the path of smoke because of the slump in the oil prices, suspension of the ACA project, and the general bloodbath in the oil market thanks to the fight between Riyadh and Moscow?
That's a big one.
That's Dr. Dr. Juliet for you.
Yes, thank you very much, Dr. Juliet, and hello. So yes, smoke, bloodbath, investments going down the wire, all of that in there. It's tough for a lot of the local companies. I have some of my colleagues, actually one who runs a supply chain company, from Takoradi, and a few others I know, and it's been a difficult moment or a difficult time. But the thing is that this industry is cyclical. So I showed you the downturn in 2014. I talked about 2007 when the oil price and the financial crisis. You can go back to 1998 with the Asian financial crisis. And at that point, oil was trading at $10 a barrel. You can even go further back to 1989 as well, where again, because of the Black Monday crash, they call it, also oil prices, went down. But what I saw, if you kind of take a historical perspective, is that in all of these downturns, some of the companies become more nimble. Some of the companies are able to deploy and use technology much better, be able to control like their cost. And so post crisis, they are the ones that are now able to withstand and able to kind of generate more value for their shareholders and their stakeholders. So I think for the Ghanaian indigenous companies, yes, it's tough, and some have made these investments, but it depends on whether they're looking at it from a long-term or a short-term perspective. The other thing that can really sustain the sector, I think, also is if we have the developments, like the ACA, that has been postponed for now, but if eventually it comes back on stream, if we see Springfield moving ahead with an FID or concluding their negotiations with ENI for the unitization, and if we then tend to see the likes of, Exxon, etc., making some commitment in the sector, then yes, we may see it may be pretty good times for the industry. But at the moment, I think the short to medium term outlook for the next 1 year is one that is not super great for a lot of the local supply chain companies. Hence why I said perhaps maybe it's time to think about waiving off some of the service fees or the licensing fees or permits that they have to renew or pay annually.
All right. Thanks very much, Doc. One person is asking, how can we retain our talents so we have access to sufficient skilled labor when the market recovers? That's from the Blaze.
Tough one. So I'm sort of a believer in you could call, open market sort of economics. So what will happen post this crisis, as has happened in most other jurisdictions, is that some of the people who work in the sector would have moved on to do other things and use their skills somewhere else. And then you would also have others, who would have stayed and become much more nimble, become much more competitive and much more efficient. So I think broadly we would see a reduction in the HR or the human talent pool. I looked at the last report, the last petroleum reconciliation report published by the Ministry of Finance, and we have about 6,000 people employed directly in the industry in Ghana. I think we're probably going to see that, dwindle in the next couple of months or even a year. I won't be surprised if, we are looking at 4,500 persons. But it means then that these are the people who post-crisis would also then have an opportunity to, create more value added. Unfortunately, it's just the nature of the industry, and you can go back to Schumpeter or Schumpeterian economics and argue it's a bit of the creative distraction process.
All right. David Alimero, a PhD student in China, is asking, I would like to find out, considering the fact that oil and gas revenues are subject to price volatility and do not seem to be more for the economy, is it not advisable for Ghana to consider increasing the consumption of renewables, such as wind, given the exhaustive nature of the oil and gas? Ghana has so far achieved 1% of its target of achieving 10% generation of renewable energy in the energy mix by 2020. What has shifted, but has shifted in the way forward? So it's basically asking about the increase in renewables, the renewable energy mix in Ghana's outlook going into the future, looking at the price drop.
I mean, I think David is absolutely right. It's a low-hanging fruit. So we've been talking about increasing the renewable energy share of our energy mix for the last 10 years, if I do recall. So it was in 2008 that they promulgated a policy that said by 2020 we should have 10% of our energy mix coming from renewables. And as we speak currently, it's actually less than 1%. The last time I checked was 0.2 or 0.3% or so. So yes, there is an opportunity here for us with this downturn, but also an opportunity in the sense that even those who work in the oil and gas industry, a lot of the skills, especially on the technical side, can easily be deployed, into the wind or other, industrial clusters within the energy mix or the energy value chain. So what would be interesting for me is, to see some active moves, towards pushing all forms of renewable energy, wind, solar, and its deployment at cost and at scale in Ghana. The nice thing is that when you look at the cost of wind and the cost of solar, it's more than halved over the last 3 or 4 years. And some of them are even as competitive as conventional fuels such as oil and gas. So it's an opportunity in there for us to talk or increase our proverbial diversification effort and not just concentrate solely, on oil and gas. Another small point there, I think, is on the gas, which is where I also have a lot of interest in. So gas is often marketed as a transition fuel, and for us, there's a lot of demand for gas currently for power production, but you can actually argue again. There's an opportunity in there to use gas for petrochemicals, for things like fertilizer or urea, and then also even for industrial use. So I was involved in a study last year where we spoke to about 30 companies in Tema and Accra and Takoradi who indicated their willingness to actually use gas for their process and heating equipment if that was available at their door, because currently they're having to import RFO and other liquid fuels for their process. So I think really it's just an opportunity. It's a question of whether we would grab it, or
Not.
we'll be down here 5 years again to talk about the same thing.
All right. I'll combine two questions in one. Baba Isaka from YouTube and then Terry on the Zoom group chat. Terry is saying that offshore drilling is significantly expensive more than onshore. And considering the current bleak offshore drilling forecast, what is your take on government focusing more on the onshore? And then Baba Isaka from YouTube is also asking, what should be the ideal interest of an NOC? So just combine the two questions: an ideal interest in the NOC, and then the focus on onshore.
So on the NOC bit, I'm not sure I fully understand the question or what the person intends to
So
say.
he is saying that what do you think is the ideal interest an NOC should have to boost the country's revenue?
So
So I
what
want you to
should be
link
the
it to the
strategy that an NOC would pursue in times like this?
yes.
Okay, fair
Can you
enough.
please link it to the onshore? It seems
Yes,
offshore drilling is more expensive,
yes,
and then the government's focus can go onto the onshore going forward.
sure, fair enough. So I think yes, the two questions are related, and you can see a lot of the onshore work currently is being undertaken by GMPC. So they completed the major seismic survey of the Votain Basin, which covers 40% of Ghana's total land mass. And that the results are being sort of interpreted to see if there's a working petroleum system, and then potentially drill a couple of wildcat wells. If you look at GMPC's strategy pre-COVID, they mentioned things like they wanted to become they want to become a world-class operator by 2027, and they want to operate their own oil field or well in 2019. So that was a strategy that was kind of set a couple of years ago. At the moment, it would be a bit challenging to meet all of that. And I say that because GMPC's financing is also comes directly from the oil revenues. And in fact, if you look at the statement that the Minister of Finance made in Parliament 3 weeks ago, they've basically slashed GMPC's budget by about half, or 40% or so for 2020. And likewise, I suspect maybe for 2021, and 2022 going forward. So for the NOC, it's a tough time, or would be a tough time for them. So I think it's a question of going back to the drawing board to see what sort of other strategies they could pursue. Certainly, I think the inland or onshore work should certainly continue because they already have the seismic data, and it's a question of the interpretation and whether they can take advantage of the downturn to drill one or two wells, which would be cheaper than if they were doing it before the oil price crash. But the wider strategy of the NOC to become, a major global operator by 2027, I think there's a couple of question marks, around that.
All right. Thank you very much, Doc. I think we've overstayed our welcome. I'll ask one last question, and then that will be it for us. Just last week, Friday, government directed Springfield and ENI to begin unitization talks. And looking at your 5 strategies: capacity development strategy, access to worship, What do you think Springfield should do, or how do you think they should approach this unitization agreement negotiations, bearing in mind that ENI is already operating or producing from that field?
It's a tough one. So you actually rightly said it that ENI already operates in the field. I do recall when the announcement of the discovery was made, I had a conversation with someone in the industry and said, that basically the fairway or the geological structure is, more or less connected to ENI's Sankofa discovery. And therefore, we probably will be looking at, a unitization to some extent once the, the detailed geological work has been completed, or we would have to, Springfield would need to get a farm in, partner, because they had 84%, I think, of the working interest in that field. So at the moment, I think the negotiations have to continue. I do recognize that perhaps ENI, and I said it with a big caveat, might, have a bit of a upper hand here because they already, are operating in the basin or in that particular block and may have more knowledge about the geology, the structure, the reservoir, etc. But for Springfield, what is obvious is that in this environment with 84%, equity, they would struggle to actually raise the financing, required to execute a project on that scale. So perhaps, the unitization has to proceed, and then, or they get, a farming partner. And I'm saying this with a caveat because I don't know the specifics of what is going on in terms of the negotiations or the unitization negotiations. So I can only speak more broadly in general terms without the specifics at hand. So that's just the answer to that, but with a caveat on there.
Okay. I said last question, but let this be the last question. Someone is saying, what is your perspective on the price risk management, into bracket, price protection in times of price fluctuations? I think Talo reported that they've hedged their prices. So going forward, they are still, or they will still be selling at a fixed price. So I think this question is related to that. And then please link it to this question. Someone is saying, explain your basis for the $30 to $40 crude oil price call in 2021 and 2022, respectively.
Okay, so I can take the first one on the price. So
Yeah.
the $30 to $40, this is informed by the EIA's latest forecast. So that's the U.S. Energy Information Administration. But it's actually not that different from what the IMF, the World Bank, OECD, IEA, IHS Market, Wood Mackenzie, all the big sort of global consultancies and multilaterals who work in this space are all looking at the 30 to 40 range. 30 range because as the markets sort of stand now, actually this morning the oil price is $30.5 for Brent a barrel, from the 20 or so that it was just a couple of weeks ago. So the 30 range is quite possible, and going into 40 is also quite probable. And why that is because if we see an uptick in economic activity along the lines of the V-shaped or even a relatively smaller U-shaped recovery, then it means that demand for oil products and demand for oil in general would pick up, and that would increase the price. So remember that about 30 to 40% of oil that is produced goes into transportation and is used in the transportation sector. And that's one of the biggest sectors that was or has been impacted by this, crisis. So if the lockdown measures and the restrictions are sort of lifted, and then we have a vaccine for the virus somewhere, by the third, fourth quarter of this year, then we can expect, you know, a gradual uptick in activity and therefore slightly higher, you know, oil price. So that sort of addresses that question. And the second bit about the hedging, um, it's always a tricky one, especially for national oil government. And I'll explain it just in a second. So a lot of the oil companies, including the one that I work for, we had different hedging arrangements in place. In fact, I was the one who was selling the crude oil that we produce from our oil field. So depending on the time in question, sometimes we had like a put option, you know, with a lower price ceiling on the oil. And then other times we would have a call option, or we even have a combination of both. So we would sell 30% of our, you know, oil entitlement on the open market. Another 30 might be, you know, with a fancy financial option attached to it. And then the other 30 might be, you know, a combination of what the spot market price is at the time. But it's something that needs to be carefully considered and thought. It comes with potential downside risks as well. For Ghana, we've been bitten before, not with oil, but with gold. If you go back to the late 90s, the famous, you know, Anglo Gold Ashanti story where we did a couple of hedge on our gold and it went badly, you know, wrong, where the nation lost a lot of money. So I think, yes, hedging is not bad in terms of providing a lower threshold, especially on the, if you look at it as a put option, to safeguard, you know, oil revenues. But it's something that needs to be thought about a bit more broadly before, you know, plunging into it.
Thank you very much, Doc. I really said the last one, but I'll ask one last question. Then you give us your final words, our key take home. Then we bring the presentation to a close. Kumsin from Tema is asking, what could be the alternative to sustain active working staff that the service companies are letting go? So please answer that. Then you give us our key take home, and then we'll end it from there.
I don't know the alternatives because you see, unlike here in Europe, in the UK, where you have all these fellow schemes, you know, where the government is basically paying people to stay at home and for them to spend more or less to keep the economy going. Because the idea is, you know, when you spend, you increase aggregate demand, and that, you know, increases economic activity. We don't have the luxury of that option in Ghana. So I think for the companies, it has to be looked at on a case by case basis. For some of the companies, I suspect they will look at their operational performance and outlook, what sort of contracts they have in the pipeline. And if they cannot justify keeping some staff, you know, on the payroll, then I struggle to see how they would not let, you know, some people off. Of course, there's also a few difficulties with the labor law and even the local content law that needs to be considered in terms of the hiring and firing. Um, but the writing probably is on the roll in the sense that we may have, you know, a few staff. So I said about 6,000 people or so are employed. Probably will have a couple of thousand, you know, potentially being laid off. So I'll just kind of summarize. I think the take-home point really, if I were to summarize, is that with the slowdown in activity, with the postponement of some near-term projects that we're looking at in Ghana, if things continue as they are, then we would be peaking in terms of our production from the three fields that we have about 2021. The second point is that oil revenues for 2020, 2021 will probably be half of what has been predicted or projected in the budget. The activity levels in the industry overall, you know, in the near term may not pick up as much as one would want. However, there's a couple of things that we can do, I think, to sustain investment in the sector in the mid to long term in a post-COVID world, where I talked about the exploration strategy So here's some fiscal incentives, potential extension of contract or license terms, and also maybe a waiver of some of the service charges and fees, that the service companies have to pay. The investment environment, tinker around with the fiscal regime, especially this windfall tax thing, which I think it's unnecessarily cumbersome and too complex. I think there's something that can be done on asset stewardship with the marginal oil fields that we have, so tie some of them back in and maybe reduce the tariff income, the tax on the tariff income, as well as maybe a small field allowance scheme, or even like an uplift on investment, as Norway and a couple of countries do have. And then on the supply chain, on local content, go back to the drawing board after 10 years and really pursue actively this supplier development program, because it's been shown to work in very well in other jurisdictions. So I think if I were to summarize things, that's probably how I would summarize it and leave it there. So thank you all very much. I hope you've enjoyed it, and for the students, you found something useful out of this. The video would be available on the SPE Ghana YouTube website as well, so you can always go back and replay it. So thank you all very much, and have a lovely afternoon.
On that note, from on behalf of Celestina Session President and then Secretary Shina, I would like to thank Dr. Teo very much for such an enlightening presentation. I say we've really enjoyed your presentation. And to all the other participants, please be on the lookout for SPE Ghana. We'll be bringing you more of such experts in their field to share their knowledge with us. Thank you very much, Dr. Teo, and then thank you everyone for joining us.
Thank you.
Have a good evening.